Today we're going to continue with Chapter 4 in our second learning objective. We're going to look at how to use the worksheet to prepare financial statements. Now, we already introduced the worksheet earlier, but a couple of things to notice. First of all, when we think about a worksheet, again, it's going to be a tool that's going to be used to prepare financial statements. So it is an internal recording device or an internal document, and it is a tool used to prepare financial statements, but more importantly, it is, number one, going to facilitate the adjustment process, and secondly, is going to help us prepare, as the second learning objective tells us, financial statements. But it is not, the worksheet is not, as we've said before, okay, so it is not a financial statement. So we're going to be using a multi-column worksheet. Now, again, you could probably use something like Microsoft Excel to build a worksheet, and it is, again, it could be used in the adjustment process. I think I mentioned that in my introduction, that clearly it does absolutely help facilitate the adjustment process. So we're going to take a look at a worksheet in just a second, but just its headings are important, I think, at this point to understand that the worksheet starts with the account titles. This trial balance is unadjusted. Then we make our adjustments, and again, as I said, the adjustments when they're made on the worksheet have not been journalized or posted. It allows us to see the effects of the adjustments before they're actually entered into the accounting system. Then we prepare an adjusted trial balance, and then from there we do the income statement, and then prepare the balance sheet. So if we look at a more formal document for Smart Touch Learning, this is the worksheet. I believe we left off with a partial worksheet earlier. So the worksheet would operate, as you can see, as a tool to, number one, facilitate the adjustment process, and secondly, help us to prepare our financial statements. Now, when we look at the columns, the first column, of course, is the unadjusted trial balance. Then we have the adjustments, adjusted trial balance, income statement, and balance sheet. So very simply, we enter, and this again would be done on an Excel spreadsheet, we enter the unadjusted trial balance into the debit and credit columns. And again, you want to be sure that that balances. The unadjusted trial balance, as we've said many times before, does not prove the accuracy of the bookkeeping system. It simply would allow you to note that debits are equal to credits. So it just tells us that debits are equal to credits. It does not have any implications for accuracy. And then we enter the adjustments right on the adjustment column. And remember, at this point, nothing's been journalized, nothing's been posted. And again, our example that we've had before is that office supplies were $500. When you went into the warehouse, you only counted 100, so that means that you must have used up 400. So you're actually making the adjusting entry on the worksheet first. So you're debiting the supplies expense account and you're crediting office supplies. Now, of course, in the next steps, as we move them across, you'll see that office supplies started with 500. We used up 4, and there's 1 left. And since this is a balance sheet account, and because it's a balance sheet account, we simply move it over into the balance sheet. Income statement, same thing. If we had supplies expense of 0, now we expense 400, and now we've got 400 of supplies expense on the adjusted trial balance and 400 of supplies expense on the income statement. Now notice we cross-foot or extend. This is known as cross-footing by adding a cross. So accounts receivable of 1,000 plus the accrued revenues of 8 give you 1,800. So you're cross-footing this way, and now we're extending. We cross-foot office supplies by taking the opening balance minus the amount we've used, gives us the ending balance of 100. Once we have the items cross-foot, and we know that, first of all, we have to be sure that the adjustment columns are equal, and then the adjusted trial balances have equal debits and credits. So the debits and credits have to be equal on the unadjusted trial balance, the adjustment column, and the adjusted trial balance. Now after we post, or at least put everything on the adjustment column, cross-foot to the adjusted trial balance, now we could extend. So we take the debit in cash and move that to the cash line on the balance sheet. Office supplies and receivables. Receivables are an asset. It's also debited. Office supplies and so on. Liabilities, and by the way, even though the accumulated depreciation accounts or the contra accounts are credit balances, they still go with the assets on the balance sheet. Liabilities, accounts payable is extended. Salaries payable, you had 0 to begin with, but you accrued salaries by debiting salary expense and crediting the salary payable, and that gets extended to the liabilities. Now, income statement side, sales, of course, come across. You've got all of your expenses after they've been extended appropriately, and we list the expenses. And these numbers should be familiar. Revenues or sales of 17.5, and then your expenses. The credit column for the income statement exceeds the debit column of the income statement, and the difference is the net income. With respect to the balance sheet, the debits exceed the credits. The reason for it is because there's no retained earnings on this balance sheet. Beginning retained earnings is 0. That's exactly what you see. So essentially what we're doing is we're using the net income for the period as the balancing figure. So now debits equal credits on the income statement column, debits equal credits on the balance sheet column. And notice that we move the income from the income statement to the balance sheet. We're essentially debiting the income for $85.50 by debiting the income on the income statement for $85.50. That effectively closes all of those temporary balance sheet accounts. So now all of the revenues and expenses are collapsed into this one line that we call net income. Then that net income is needed to balance the balance sheet. So we have to balance the balance sheet by moving the net income into the balance sheet credit column, which essentially reflects the retained earnings. So to summarize, each account in the worksheet, the amount in the adjusted trial balance column is equal to the account balance that will ultimately appear in the ledger after they have been journalized and posted. Remember, when you enter onto the adjustments column in the worksheet, you have not made a formal journal entry. So you have not journalized nor posted to the ledger. After the worksheet has been completed, the statement columns contain all of the data that we need to prepare the financial statement. So going back, when you look at the worksheet, once you've gone through this process and you know that debits equal credits each step of the way, and the balance sheet now balances by the amount of net income, you're reasonably certain that these are the correct amounts. And the benefit is now you could prepare the balance sheet directly from the worksheet, and you could prepare the income statement directly from the worksheet. So the income statement, of course, is prepared first, and that's coming from the income statement columns, and then the retained earnings is moved to the balance sheet. The worksheet, again, is a tool that accountants can prepare financial statements before journalizing and posting any of the adjusting entries. Now, this permits a review of the statements to see if they appear reasonable before we make actual entries into the accounting system. So before we make actual entries into the accounting system, we look at the financial statements to see if they are reasonable. We do a reasonableness check. That will enable us to uncover any problems with the adjusting entries before they are actually journalized and posted. So when we prepare the worksheet, we have to follow certain steps, which is really equal to the sections of that worksheet. The first section of step is we prepare the unadjusted trial balance. Then we enter the adjustments in the adjustments column. Then the adjusted balances are extended or really cross-foot. You add a cross, you cross-foot, and that becomes the adjusted trial balance. The adjusted trial balance amounts are moved to the appropriate financial statement column. That is the income statement or balance sheet. And then, of course, we compute net income or net loss. So, once again, the transfer or closing, as we call it, of net income into the balance sheet is done directly on the worksheet. And then, of course, we would prepare the financial statements directly from those worksheet columns. All right, so the income statement you could see shaded here would be prepared first. And then we're going to prepare the income statement first, and then we're going to prepare the balance sheet. So the worksheet is used to facilitate both income statement preparation and balance sheet preparation. The 3 points that you need to think about as a summary of the worksheet. And let me get to the whiteboard. The first thing is that the worksheet facilitates the preparation of the financial statements because it organizes the account balances, and the statements can be prepared basically before the adjusting entries can be or will be made into the system. So it uncovers errors, and again, it helps us in that regard. So to summarize, the worksheet is going to facilitate the adjustment process. All right, we get that cleaned up for you. So when you're making these entries into the adjustments column, you can see again that it is in fact going to be correct or incorrect, whether or not debits equal credits. And then, of course, it facilitates financial statement preparation. Another point by way of summary is that the worksheet is optional. Does not have to be prepared. It's an internal document. Or a tool for the accountant And finally, just to, again, emphasize that it is not a journal. Okay, so it is not a journal and cannot be used to post to the T accounts or to the general ledger. Okay, so it cannot be used to post. You have to make the journal entries formally, and then they will be posted. So this module, although very short, does have some significant use for us because, again, the worksheet is an internal document. It's a tool that will help us facilitate preparation of adjusting entries and the financial statements. Now, the next module of Chapter 4, which is going to contain Learning Objective 3, will explain the purpose of journalizing and posting what are known as closing entries. And we're going to pick that up in the next module.